Welcome back to the only hour you need in the market other than the Friday stream to get yourself set up for success. We are boasting a beautiful 56% return on the two main picks we've been calling out for weeks and months. You should be green. You should be making money. You should be getting fatter because you're ordering food from DoorDash. If you're not, then you're missing it, and we're going to get you nice, fat, and fed. We're going to start with a little bit of a take on the market. Macros are looking pretty interesting. Last week inflows were good. This is not characteristic of July. We were just discussing this. What do you think about inflows today? You just mentioned to me about this morning seeing 11 million come in flush versus I think you said the 6 that we had been previously seeing. Weird, wild, sexy. I like it.
No, I loved it. It was a great open. It was a wonky open because there was a big sell-off in tech, especially in the first hour as well. V-shaped recovery, but yeah. So if you guys don't know, I rarely trade the first 30 minutes to 45 minutes of any day, mainly because I want to see the volumes and be in the market for me to find some kind of alpha in the trading arena. So usually, like posts like past couple months, like $8 to $10 million. 8 to 10 million volume on the SPY is the norm. It's gone so much less and less the past couple months. Now it's like if we're 8, we're getting lucky. Usually it's like 6 or 7. This morning it was 11. I don't know if it's because of the repositioning that occurred last Friday that resulted in that ugly Friday candle, and people just want to get into a lot of new names that they repositioned last Friday, or Q3. A lot of people are just waiting for Q3 to happen to initiate any new positions, or some window dressing that occurred last Friday. They're offloading and doing some new positions. Either way, a ton of volume that came in the markets in the first hour, but it faded throughout the day. Like if you look at the SPY, I think it was a 28 million at the end of the whole day. So not much happened throughout the day, but that sign of like a pickup in volume in the first hour, that was new characteristic, in my opinion. I want to see if it kind of comes to fruition more tomorrow. But again, Wednesday's half day. We have the market closed Thursday. I can promise you nobody's gonna come to work on Friday. So like tomorrow is like the last trading day of the week. So I want to see what kind of volume comes in tomorrow. But there's also some wonkiness that's occurring right now as well, where the Fed minutes is coming out on Wednesday after market because of, again, half day. So whatever occurs in the Fed minutes, we won't know. Like there will be no price action for almost 2 full days till Friday. But again, Friday is going to be a nothing burger. Nobody's going to be trading. So it's almost like 5 full days after the Fed minutes gets released. That's when we're going to see some real price action. That's really weird. Also, NFP is coming on Friday as well. And nobody's going to be working on Friday. So it's like a lot of big time data is coming this week. And we're not going to really know the impact of it until next week. So it's a wonky time to be in the market. But today was a great day. Indices have been consolidating for for a week or so. Austin and I have called out twice last week. We can see repositioning happening. Like indices are flat. Mag 5 big tech names aren't really running. But if you look under the hood, there is a lot of high quality growth names catching a bid. And we saw some continuation Wednesday, Thursday, Friday, and today. You see on the post right here, Snow is exploding. Like Snow's up 6%, Tesla's up 6%, MongoDB's up 6%, indices are flat. This is repositioning, and all three of those names happen with volume. So we're going to go over the SPY charts before we get into the other names that's called out, but I think it's a great day to be a growth investor.
Yeah, it is, man. I mean, you can't argue with this setting up here. I mean, SPY is actually looking like we're setting up for the next leg of the journey in a historically down garbage month of sideways trading and nothingness, in which most of the market is completely out of the market. Yet here we are with flush volume, looking last week on par, trading 13.725 billion on the SPX. That's insane, man. Mm-hmm. That's insane. So just look at these volume bars accumulating, right? Buyers, and then we fell off for a couple weeks. Now we're picking back up again. And to me, that's kind of unbelievable, given we haven't seen volume peaking like this for quite a while, other than a few big days, which tells us that we might be setting up. So for those using the stocks buddy indicator, you can see it went bullish at 513, give or take. Nice $30 move for options traders. That was a 450% swing. So if you don't have this indicator, you are missing out on taking 100 and turning it into 575. So whatever. But calculating stop loss here at 542, which I would agree with. My level that I'm watching closely is right here at about 544. I want to see that hold. If it holds, then I think we're just in for more upside, and 560s on the horizon. I don't see any other option here for the market. Like, there's no other direction to go other than up. I mean, you could see that we've got that trend strength right here, which is going to take us just higher and higher. I think some analysts are talking 600. It's stupid. It's dumb, but I can't argue with it at this moment. You know what I'm saying? I just can't. Especially going into, like, other than September, right, which is just a heinous month to be alive. Seasonally which is also the month I got married. I hope that's not foreshadowing. It's typically like the worst month in the market, right? And so, but historically then, October, November, December, we always see the Santa rally. I mean, we always see a nice 10, I don't know, I feel like we get a nice 10%. Do I not? Am I incorrect on that?
No,
so where do we go? This is stupid.
That's the thing. It's a lot of people on the daily, the RSI is overextended, overbought on the SPY. So people like, oh, it's going to normalize to the mean, and that's going to require a pullback. No, it's more going to require maybe some cooling off consolidation. Even if the market goes up to the right and takes some time, doesn't have to go there in a couple of weeks, maybe it goes there next 2 months, the RSI is going to fade and it's going to go towards the mean. So like, that's a scenario where I could see us hitting 560 by end of August. Like, the summer, nothing's going to happen. Maybe we have one really bad day, but the rest is just going to be a slow recovery to all-time highs. Earnings will be another catalyst to push us there.
Look at this, though. Each time, so I like to trading views like native RSI, right? Every time we see the purple come back to control and get support touch with confirmation of price action, it pushes higher. Now look at the times it failed, break, support, higher. Fail, break, support, higher. Now the question is how much higher? Well, let's say it goes back to 78 or so. And this is the monthly, mind you. It's a monthly chart.
Wow.
So I think that's why I think like 600 of 10% move is not crazy.
It's not crazy. It's just there's a major catalyst that might prevent that. That's the only issue. Like, I could see a 10% move by after the election where less noise. Market doesn't like noise. There's still like doubts that Biden's going to run, who's going to be winning. Like, there's just so much uncertainty for election that I just don't see the market running up unless this earnings cycle, you see big tech continuing their dominance, and essentially 5 names will be carrying this market to all-time highs, which the indices will benefit off of.
I couldn't agree more. So this is all I'm going to say about it, but I'm going to throw it in real quick. Bottom of the screen, you see it 50% off your trading coach. We're talking about right now that there is an unprecedented opportunity for the market to go up another 10% from here. We will be capitalizing on all of the individual names. We're not doing some index bullshit. We're finding the most high-performing names. Our goal, and what we've done over and over again, is find names that outperform what we could see as an extremely bullish macro market right now. You are going to get each and every one of those picks. We're knocking it down to half price for 4th of July. Celebrate America a little bit. Give everybody a deal. I'm going to post the link and the discount code in the comments. Get in there to get it. We're not going to leave this open for long. We're going to close it out 4th of July. So if you miss it, you miss it. It's literally half off. One of the best programs you can get. You get our picks. You get 4 other analysts that teach you their own independent strategy. You get everything you could ever want. Day trade alerts, live day trading, etc. The most importantly, you're going to get access to the picks that you guys have been following this. You've been watching us crush this week in, week out, week in, week out. Don't miss, don't sleep on this. That's all I'm going to say about it. So macros covered. Let's talk Snowflake here, man. This is your chance. If there's anyone's face, particularly you want to rub this in, feel free to spread the joy. That did we scoop the bottom? We don't have absolute confirmation, but I will say this. When StocksBuddy turns over on the weekly, it's usually a pretty damn good sign, especially coming off a harsh reversal with good volume. RSI cross up. The last couple times we've seen a nice RSI cross up here on the weekly chart for Snowflake. We saw a significant run up, or at least positive consolidation. Let it rip.
No, so Definitely not my style. Rub it in, but honestly,
I'm
there's
just
just
saying
so much
hype.
FUD out there that it was just like it was funny, but also I felt bad because I know some people got busted out of their position at the lows of Snowflake, and you're seeing like a lot of analysts today. Like the reason it got up, caught a bid today initially was, let me pull it up. It got a bullish note today from Goldman Sachs. It added it to the America's high conviction list with a 220 price target. Pretty much essentially calling out that I can read right here actually. So Goldman believed that Snowflake is better positioned to outperform expectations due to a reset in expectations. We call that out. They sandbagged. Now essentially the valuation has never been so at this cheap before, with nothing about the thesis breaking at all, except for people filling the gap of this narrative that they're not an AI player, they're just some data warehouse that's going to be obsolete due to the hyperscalers eating their lunch. I'm like, I couldn't say it. I was being a dead horse the amount of times I was saying that. That's just so not true. 35% of the Fortune 2000 data stored in the Snowflake ecosystem. They have a product oriented CEO who will create an insane amount of innovation on the AI go to market products that we have no idea what's going to, none of that, those go to market products on the AI front are got in their estimates for the full year at all, but the expenses are. So like that's a clear sandbag. And knowing the background of the new CEO, it's essentially gonna. Goldman Sachs said that they believe the near-term investment cycle around AI can unlock material new revenue streams. Just call that out. Go-to-market AI products will be launched from leveraging that data. 35% Fortune 2000 data, and it's also going to add growth optionality on top of a best-in-class data warehousing product where significant on-premise migration opportunity still remains. This is absolutely true. I think it's like less than 30% of companies are on the cloud, really. They're still on-premise. There's a ton of runway for these cloud stocks to catch a bid for years and years because there's a lot of companies still on-premise and they have to go to the cloud. That transition takes time and it will happen. It's essentially like saying EV is every company will go to the EV space. Like, it's essentially the same thing for on-premise to cloud. And Snowflake's in a very unique position to capitalize the most off this because of that data advantage they currently have. And they already built a lot of these new initiatives like Cortex AI. They have yes, they have a competition in Databricks. That's probably the biggest bear argument for Snowflake. It's like, oh, Databricks is a lot more AI and machine learning lens versus Snowflake, which is very data warehouse. Yes, that makes sense because Databricks got founded from a CEO and founder who was very much a data scientist. So he created this company with that lens. But a data lake is very different than a data warehouse. And I've been saying that data warehouse is a lot easier to eat data lake's lunch than the other way around. And we're kind of seeing that right now with the iceberg. What a lot of people are, I won't get into it too much on the technical front, but a lot of people are adopting the iceberg tables, which is not good for Databricks and it's not the best for Snowflake, but Snowflake can give up the 10% revenue they get from the storage compute. And because there's going to be a lot more queries going to be generated from these icebergs, that's going to benefit Snowflake in the long run. So I won't get to it too much, but Snowflake will be one of the biggest beneficiaries of this AI thematic on the software application layer of the new digital economy. And yes, we don't see it yet in the fundamentals or financials, but when you do, generally that's when it's too late because the stock's going to run up a ton ahead of it. The market is a forward-looking mechanism. And that's why when I know the thesis isn't breaking in a company, I just know this narrative got created because it's in a weird transition period from they're behind the AI race on the data front, but they have such a luxury of this 35% of data. The world's data is essentially in their ecosystem. So they can leverage that and create a lot of go-to-market products really quickly. We saw it already with their in-house LLM. It took 3 months for them to create that at an eighth of the cost of their peers. You saw that scenario play out right there that happened a couple months ago. That's going to happen for the next couple of years. They can just create all these innovative products based on the amount of data that's stored there with a right CEO. So I've been pounding the table. I couldn't pound it even more. Snowflake is a no-brainer add in the 120s. And it's going to be a mega cap company in like a couple years. And right now, when it was priced at $40 billion, I was like, that's insane to me. But I get it because they're sandbagging hard. And if you don't know Snowflake's products, you don't know their story, you don't have a conviction in the hours of research of learning the company, I could see how you would get scared out of your position, because it is on the more pricey side on valuation. And if it doesn't have an AI feature in the enterprise AI stack, it's gonna go lower. But I've been repeating it every single time we have these streams. Like, that's not the case. That's not the case. Like, it's going to be one of the most important positions of this enterprise AI tech stack. And like, it's funny that now people are like talking about it or buying into it now when it's almost at 150, but everyone was dunking on it in the 120s. Sentiment falls price.
Nothing's
That's all
changed.
that is.
That's the irony, except that it got cheaper.
Yeah.
But that's, guys, and as a point of reference of the market, right? Price goes down, people go, shit, it's a bad trade. Wrong. In some cases, that's true. In this instance, right, we're talking the Snowflakes, the Teslas, high growth data plays that are going to leverage the future of business growth, technology, et cetera, that are well positioned. They're just giving you it's a discount. They're giving you a discount. That's what the market's giving you right now. That's what they've been giving you. If you look, I'm going to pull this chart up again. You're going to poop yourself. The last time we saw a significant break above this SMA right here on the hourly, we saw a 61% move from right here, November to February. We moved 61% to the upside when we saw a significant break after a lot of consolidation and teetering. Same thing, consolidation, teetering, sell-off, significant break. Now we can extrapolate from there and hope that we get to see that 61% move, which I think is very, very feasible above 145. So basically, we move with strength above 145. We should get a nice push up that I think could run over 61% from there, meaning a 61% additional on top of the 10% plus, you're already up.
And also, it's been basing for over 2 years. So like, once it breaks out on the proof of concept, we're gonna see in like, I can't say specifics, but I have peers in this industry. Like, they tell, I do channel checks. Like, there's going to be a pickup in the second half of this year. I don't know if it's Q3 or Q4. We're gonna see like, wow, like just a wow quarter. Once that happens, this name will fly. Like, it's gonna, once it flies past 200, it's just gonna go up, because the advantage that Snowflake has in this two thematics of data and AI can't be replicated. There's no fear of them dying off into the sunset of AI just conquering software. Like, that won't be the case. And once that's decided on, they're gonna have a tier 1 premium valuation assigned to it. That's gonna look so dumb, like how Tesla's valuation right now looks really dumb, but it's justified because of how wonky their fundamentals will look once FSD comes into their financials. Like, once that occurs, it's just gonna go. It's gonna be a race to try to buy Tesla stock, because you never experienced a company this size at that scale somehow just get an infusion of a high margin revolutionary product like FSD just added to their balance sheet. It just, the ceiling's endless. Snowflake's almost like that, where if you see how like the data sharing capability, like the reason I'm so bullish on Snowflake isn't just the data warehousing component, it's the data sharing. Like, once you're in Snowflake as a customer, you can share data with your competitors, other companies. Like, the data sharing component of that is what makes me so bullish on it, that only Snowflake has. No other company.
Is that an additional, like say I'm a company, you're a company, right? I want to share my data with you. Do I get to make some money off that?
Yeah, you get credits. Like, you get credits in Snowflake's ecosystem. Like, it goes towards, like,
keep it within that. So they're not
exactly. It's like the Starbucks. Starbucks is a bank, because
bank. Yeah,
that's, there's essentially creating this whole.
My wife spends 10, yet they have $50 of our money somehow because she moved
exactly.
I got to move it to my wallet. I save more there. I'm like, no, you spend it before you spend it.
And guess what happens?
They get interest on your cash. Like, they're making money off your money before you even get anything for it. 100%. Genius, diabolical.
And if you have credits, you're not going to leave Snowflake to do some competitor, because like, you have credits to stay in. Like, why?
It's also a nightmare to do it. So
yeah, it's a nightmare. You could just sell your. it's just so advantageous that it doesn't make sense to leave. Like it just creating this massive ecosystem, similar to what App Store did for the applications. That's what data is going to be for Snowflake on the edge part of their business. It's called edge. And you're seeing the adoption it's just rapidly getting adopted, and they call out that metric every single quarter. Like it's a massive mode. So I won't get into it too much right now, but like, data sharing is the future of enterprise AI. And that's why I think Snowflake is like the best of the breed among to benefit from that. So once this breaks out from this long base it's in on for 2 years, and then once they get the premium valuation they deserve, and you see in the fundamentals, they already have a Rule of 40 score of 50 plus for the next 3 years, and that's without the AI bump that they're going to get. It could go to 60 plus in the Rule of 40 score. And if that's the case, that's CrowdStrike status. And you see CrowdStrike's valuation right now. It's like a 50 to 60% premium among any other cybersecurity comp. It's because it's justified. That's the best of breed tier one. Investors will pay up for tier one plays. You see with Tesla back in the day, when the EV, when it was running in 2018, CrowdStrike. You see with Microsoft right now. Microsoft is really expensive right now for a Mag 5 name, but they're willing to pay up for it because OpenAI has a first user advantage. And you're seeing it also not yet with Amazon. Well, once Amazon becomes the most valuable company in the world due to their infrastructure and the robotics feature that's going to come to light in the next couple of years, like they're going to get that tier one premium as well. So that's why this could be a very easy $300 stock, like very quickly. A lot of people don't assume that, but I could see Amazon being a $300 stock before 2026. That's the crazy thing about Amazon.
It's wild, dude. I mean, so just so you guys know, if you're looking at that 50% off July promo code, this one Amazon trade would have paid for the whole thing. It was one options trade. It was a 230 call. We were loading this up as equity 145. So you're up unbelievably so in equity. And then we alerted this options trade down here. That call returned 100% ROI, literally 100% overnight, pretty much. It's still ripping. I think it's going to go higher. I sold 2, kept 1. It pays for itself. The Amazon trade was so easy to see. I got to give Lee some credit. He's buying this at $87. I wish I had those balls. I just didn't at the time. Wasn't paying enough attention, but he was. And I mean, look at what a pickup that is off the long-term range for Amazon. It's like it's shocking, dude. It's shocking. Look at that. Boom. 120 was a buy. He was buying 85, 86, even though it broke. It broke the trend channel, so that spooked me a little bit. So I was not participating. But that breakup 110, I did buy again, and now I have a bunch of it.
I mean, so I think my age hurt me in this because I'm 30 years old. So like I want to do like the high beta names to find that multi-bagger that turns thousands to millions. Amazon won't be the name that turns thousands into millions. It's too big of a company right now, but doesn't mean it's a bad investment at all. When it was at 150, I was like, this is like a screaming buy. I should have probably bought some leaps on it to get some kind of alpha on it. I was just thinking commons because in my head, Amazon is the name you own, not trade. Yeah. You can do both. You should do both. But I should have bought some 250 leaps for 2026 because going from 150 to 250, I actually think that's a reality now. Like this upcoming earnings, you're going to see like wow numbers from them because they're hitting on all fronts. Like AWS is firing on all cylinders. Infrastructure is a hot spot right now too because of AI. They have a margin expansion story now. They're cutting costs. They're becoming such a big ad player now within their own ecosystem. Like they're just hitting on all cylinders. It just everyone is going to have Prime. Everyone in America is going to have Prime, and they're still dipping their toes internationally.
Found out my wife had it. I had it. Separate accounts. We were paying twice.
That's the thing. Like, it's a no-brainer for people. Like it is viewed as like a tax for breathing.
Yeah, and they have their officially licensed Amazon retail credit card, which I use every time I go to Whole Foods. I get 5% back. You're just not going to beat that. I only use it for grocery shopping or to buy stuff on Amazon. So I'm getting what is peak of reward as I'm going to get by that 5% interest, right, on everything I spend in credits back to the company. So they don't have to spend money, but they keep me coming back to spend more, man. And it's just so simple. I often opt to go to the Amazon store, even though I ethically disagree with it, than to go to their actual store because shipping will basically, it's like, dude, it's a significant cost savings. I just bought another car seat, right? I go on and I look on Britax or whatever the brand was website. I'm going to pay $30. I'm going to get it 5 to 10 days later, or I buy it through them on Amazon. I get it tomorrow, and I save 30, 40 bucks.
Well, it's not even just that. Did you hear about the news last week they're doing for Amazon, why they caught a bid?
No.
They're essentially eating Temu's if you guys don't know what Temu is, it's like Pinduoduo is their product. It's like such cheap knockoffs.
Just garbage.
Like, it's garbage. But Amazon's just saying they're gonna launch a competitor where products from China or from that region, they're gonna be super cheap. You can buy on Amazon. It's gonna take 5 to 7 days to get, but
which has already been happening. Just so you know, the shit you're buying on Temu, you've been buying from some American guy that middlemaned you and basically built relationships with a factory in China and then resold that same stuff that sells for Temu for 2 cents. He resold it to you for $22.99. Just he was smart enough to figure it out.
Exactly.
And now Amazon says, I don't want you to sell it. I want to sell it and make that ridiculous margin on this garbage.
100%. And guess who's going to buy it?
Jeffy.
Boomers love cheap products. Doesn't matter like how much linen they have. Doesn't matter how much bedding they have. If they see a discount, they'll buy it in case it gets dirty down the line. Yeah. That's just how their characteristics are. And Amazon is everyone in my generation, millennials, my fiance's generation, Gen Z, boomers, they're all using Amazon. It's never going away. And I do think there's a world where AMC files for bankruptcy in a couple years. Amazon acquires AMC just for their
the production and the distribution.
Exactly. At a distressed price. And if you're an Amazon Prime member, you get discounts to essentially anything Amazon partners up with. Like you saw what they do with Whole Foods. Whole Foods used to be the Air one or a super expensive price, and people wouldn't shop there because they're like, whoa, it's so expensive.
Dude, cheaper than Meijer, cheaper than Target on a lot of items.
And the quality's still there. They just turn it upside down. They're going to do that with so many different partnerships down the line because consumers are struggling, retailers are struggling. The business economics doesn't work anymore in circa 2020s like it did in 2010s. They're going to capitalize off that because they are infused in everyone's life. Like the argument is, what's more valuable in the consumer's life, Amazon or Apple? It used to be a no-brainer Apple. Now, I don't know. Like I can maybe live with an Android. I don't love the Macs or iPads as much as I thought I would. Amazon, I literally can't imagine living my day-to-day without Amazon Prime. It's just inconceivable. Like it doesn't make sense to me.
And just to yet again, we were on this stream. We talked about the breakout over 196 gives you 215. Target was hit, $15 move to the upside. If you traded options on this, it's 100% return. I didn't have any active trades here, but just kind of highlight yet again the value you get from coming to this stream. You knew the exact levels to watch. You knew exactly what needed to happen. We told you exactly what we would do to trade it. Hopefully you followed that, took a little bit of notes, followed up, made your money. Bada bing, bada boom, done. But let's go right over to my good friend Teslonius Jackson here. Unbelievable. We have entered the golden range we have been waiting for. So long-term trend resistance broken for the moment. Does not mean broken forever, broken for the moment. If we can solidify and consolidate here, I am going to be cooking up a long-term options trade that is going to make me at least 300%. That will be a Discord exclusive. So once again, get up on that promo, get it for 50% off, get up in there because I'm not going to be posting this publicly. It's going to be a banger, and we're going to crush. Just like the Palantir, I think we're up like 800%. And some of the other longer Robinhood, we're up 750%. And if you ever want to see any of those, I'm happy to prove. I don't say it unless I can prove it. Just because, you know, why be a liar when I can just oh, sorry. Robinhood is 639%. It drew down a little bit. So not 750.
Weak.
Excuse me.
That 7 handle.
Yeah. Yeah, it's 639%. And then we have some Palantir and some other goodies in the goodie bag. This is going to be one of those trades, in my opinion. And I can't wait.
So Tesla caught a bid today. I don't know, Austin, if you know why I caught a bid today, but
wasn't it the Cybertruck? Something Zach was telling me. He got beat to shit and
no, it's
put on a video, I thought.
No, he followed Travis Kalanick, the previous CEO of and founder of Uber, connecting the dots. The
Oh.
8/8 event for Tesla, like there's gonna be a launch of the robotaxi. Naturally, it makes
Oh.
sense if FSD is where I think it's at and where we're seeing it with robotaxi, clear infusion partnership with Uber. And if that's the case, and that's a future where FSD's licensed to like the Ubers, the Lyfts, and robotaxis are partnered up with the Ubers and Lyfts, that's millions of miles that you can like track on the FSC technology front, so it's easier to scale. And you have an instant partner for robotaxis to go get launched as the utility as a service, where just use a robotaxi to make business. Like I'll buy a robotaxi, I'll sign up for Uber, and I'll make some kind of. I'll be an investor, and like hopefully my robotaxi gets a lot of rides from consumers, and I don't have to drive it, but I'll be the sponsor, almost like a. It's my horse. Like I'm in a horse race now. Instead of treating like robotaxi as a car, like it's an investment tool for me. That could be the future. If that's the case, again, like possibility is endless. Like that's why Tesla's valuation right now, nosebleed. But it is dirt cheap if you factor in the next 8 years of what the fundamentals could be like. And if this partnership gets announced at all in 8/8, this name's gonna be running. That's why it's up 6% today. Like it's not on no news. Like it's a $500 billion company up 6%. Essentially, it just made $35 to $40 billion out of thin air. Why? This partnership is industry breaking if it happens. Like if Ubers in 5 years just solely, not solely, but most of them just use robotaxis and the FSC technology, what's the capex for Tesla? It's minimal. It's so cheap, but the margins are so juicy, and it's just wild what they could do with all that cash, especially with the visionary like Elon running the ship. It's just insane. You're seeing all these $3 trillion companies when Tesla's only 500, 600 bill. The runway is insane.
Yeah, and so is the setup. So the last time we were trading from here, right, from 121 bottom, we went 250%. We marked from our entry, which we gave you live on this damn stream at 140 bucks a share, 193% potential upside move to test previous highs. So should this news go wild and come back very positive, break up on the monthly for the RSI here, which means we're getting that crossover, we're getting that trend reversal to the upside. Stocks Buddy just went bullish on the monthly. If you can see here, back test it for yourself. The last time Stocks Buddy went bullish on the monthly, we went 200 to 300. The time before that, we went $17 to $424. So I don't know. You do the math there, I guess. But again, this is a back tested indicator. It's math and it's a machine. It's not my opinion. It's basically telling you based on the technicals we're seeing here. Again, you do the math, man. Unbelievable.
I'm pissed because I only own this 8% position. I wasn't done adding. I thought we'd still have some consolidation period this year.
I should have put every dollar I had in at 140 when we were sitting here talking about it, because I knew that was a long-term trend and pivot from dating back to 2019, pre-COVID, which should have been like don't be a dumbass. I did buy this last time. We got that push down at 120. I did buy some there, but again, I'm in the same boat. Not nearly as much as I would have liked.
So this goes back to the point that Austin and I were constantly preach. Like these high-quality companies, they rarely go on fire sales. It's so rare. There's something that's a macro-driven cause that's causing them to go lower, or some kind of wonky revolution that they're going through of an awkward valley between transitions from investment to application. So Tesla, for example, consumers are struggling. They're worried about paying, like, how are they going to pay next month's rent? Not, should I go buy Tesla? Interest rates are so high that it's, unless you have a lot of cash, like it doesn't make sense on leasing a new car or buying a new car. It just doesn't make sense. Tesla is suffering from that macro-driven weakness of higher for longer interest rates. Like they're still profitable though, and they're still doing really well for being essentially handcuffed to interest rates. I just didn't know how long that was going to last. So that's why I didn't go all my DCA go Tesla every week, because I had to do like a little by little, because I don't know what the macro headwind will be on a name like Tesla. And also, I don't know when FSC fundamentals are going to actually come to play. Nobody does. But when it does, it's going to be a rocket ship up. So again, keep in mind of these high quality names. Like Snowflake is a high quality name. People saying software is that narrative. That's stupid. It's temporary. Take advantage of it. I did. MongoDB, same thing. I did. These three names, I did. I do so many posts about these three names where like, if you, I'm up 10, I think 11.5% now this year. I'm obviously underperforming the market, but it's all about perspective because guess what? I'm up 11.5%. My three highest conviction names, Snowflake, Tesla, MongoDB, all down 30% this year plus, and I was able to double my positions while still being up 11%. I'm like, if you told me before this year started, I'd be up 11% and I could double to triple my positions, my three highest conviction names, I'd be like, sign me up because that's amazing. I would never dream of that scenario because I'm a long-term investor. I care less about 1 year's performance. These names will be multi-baggers for me in like 5 to 7 years. So yeah, I'm stoked about it. So it's all about perspective, and you always have to like look in the long run because being a long-term investor, patience is really difficult. That's probably the one thing that's really difficult to like master as a long-term investor because people get sold out of their positions due to FUD, lack of conviction, and owning your names. You don't know what you own. So it's very easy to get scared out of the position based on price action. Snowflake, MongoDB, Tesla being down 40% in 6 months. You'd probably think you're wrong and you should just go safe and buy financials or buy big tech when it's already up in massive amounts. And a lot of people probably did that the past couple of weeks. And that's the sad part. And now you're seeing these 20% moves in these names in a matter of a week. And they missed out on that. And now they're going to be tilted for who knows how long because they got scared out of their position they've been in for over a year. So, like, don't be that schmuck. This game is meant for retailers to be losers. And Austin and I do this twice a week because we want to share our knowledge with you guys for free because I used to be in the position as you when I was graduating college. I got shaken out of so many positions. And I still have the heartburn of that trauma of like, I can't believe I got scared out of that and I missed out on this massive move. Like, we don't want that for you guys.
We don't, man. And the thing is like, you're just, look, here's the deal. This is your ability to watch mine and his journey to not be those schmucks. We haven't been for a while now. I was 10 years ago. I was that schmuck, 100%. I was that dummy. I've even been that dummy again. And that's the thing is like, I feel like trading should be a team effort. It just should. Because like if we don't have variety of opinion, right? Like if you're telling me, like, look, I would have never paid as much attention to Snowflake as I have without you talking about it, right? Because you have a different insight, different expertise, different skill set, different opinion that opened my perspective to it and thus opened up my life to the opportunity to make money on it, right? And that's the whole deal here. It's like we would have maybe not have looked at some of these names independently, right? Or say you like Tesla, but you're and I told you something, you're like, holy shit, I got to get in. Then you do more research and you find out, yes, it's great, but whatever. Point is, you guys, we're here because if we didn't give a shit about people, this would just be all paywall, to be honest with you. And I would just be like making some money. You do it. There's a reason we do this for free every week is because I want you to know that there's somebody that will give you the truth as they see it. The truth is always subject to revision. Don't forget that. Write that down. That's a big one for you. The truth is always subject to revision, meaning what makes sense today may not make sense tomorrow. Tesla makes sense today, might not tomorrow. Macro news, something changes. Anything can happen. The point is we're here so that you can become educated, you can broaden your perspective, but most importantly, you can challenge the way that you've approached this from the beginning that has not led you into a successful position. Or if you are in a successful position, broaden that horizon even further and add a new element that takes it 10x, not 5x. That's the point, is just to bring you into the conversation, man, because for those of you that are new to the market, you're intentionally left out of the conversation. This has been a tool for the rich to keep you down in your cellar where you belong. It's not anymore. In the advent of retail trading, all the brokerage apps, like you would argue in some ways, they can make more money off you unless you educate yourself. That's the point. So if you're unwilling to educate yourself, this is not for you. Keep pretending that sports picks is going to make it or break it for you and give your money to the bettors, right? Or you could stay here, learn a few simple tools and techniques that, honest to God, are not that complicated. I want to pretend I'm the smartest guy in the world. I'm not. I think I have good insight and good self-discipline. That's what makes me good at it, right? We all have our own unique skills. The point is, if you don't have other people to help temper you, hold you accountable, and make it work, you're not going to make it. Same shit. Like, dude, I would have never fucking got sober had people not helped me hold myself accountable. I had to change my entire life. And I think if you're just dumping money into the market, you need to ask yourself that same question. Is it time to sober up? I'm not saying it's related to drugs, but it's the same kind of behavior, right? I can go gamble my life away just so much as I can drink it away, put it in a needle and shoot it, do whatever. It happens, man. Point is, like, if you're here and you're making a commitment to yourself to like be wealthy, if you have kids and you're like, shit, I don't want them to grow up like I did, or I want them to grow up better than I did, or I don't want them to worry about buying a car on their birthday when they turn 16 or going to college or any of that shit. This is your opportunity to do this shit right. These are long-term, risk averse to a degree, as much as one can be, while still being growth minded as possible. And they're already yielding results. Once again, Tesla called it 140. It's already up over 45% from that. That is a long-term hold name that is up 45%. Let that sink in for a second. Go ask your parents, the boomers, hey, if you had a pick that yielded you 45% a year, how would you feel about that? They wouldn't know because they're used to those bullshit 7% returns that the indices provide. These are individual picks. You said it early on, dude. You said, this is going to be a stock picker's year. You couldn't have been more correct about that. So just give you a quick hype on this man, not to slurp him too hard, but he did what he did without owning any of the Mag 7. Zero. Think about that. Beat the market, no Mag 7. Everyone else who did well only had Mag 7. Then what happens when Mag 7 falters? There's no boom. It's just meh, meh, meh. It's pittering along. I want to change my life, dude. I want 10K to be 100, not 10K to be 12K.
Dude, you said great. I mean, after today, I'm looking at it right now, up 108% my growth portfolio since January 1, 2023. Without owning any NVIDIA, no Mag 5 names. It's literally pure mid cap, small cap. And if you guys don't know, small cap has gone destroyed the past 2 years.
Yeah, obliterated.
But not Jumia, not really Rocket Lab, not my Impinge, which I haven't really talked about. But there's a couple other names I won't reveal yet. But yeah, it's just I said it last week.
He was buying this at $3. We came on the stream and started talking about it at $4. So even from the late entry at $4, you're up 105% as it ran to 10 plus in 1-2 months.
I'm not. I forgot about Transmedics. That's my biggest small cap. That was like 8% position in.
There's a million of them. I mean, at this point, it's hard to track. Here's another one that is over 100% return from the entry at, I think we were talking 70. You were buying this shit at like $30, but we were talking publicly live about it at 71. So even then, $100, 100%. Excuse me.
Got small cap got whacked today because we forgot to cover this. Like the 10-year spiked today,
right?
Due to bad macro data for the economy, like the 10-year just skyrocketed pre-market and continued throughout the day. So small caps showed a ton of weakness at the open. A lot of small cap names that you guys probably own or monitor, like they're down 5+%. I literally in my growth portfolio only own 3: Transmedics, Jumia, Rocket Lab. Look at the price action of those 2 of those 3 names. Rocket Lab, yes, pull back because it's a space it's a space industry. Like space is like years and years away from now. So like clearly a dry capital market will affect a lot of those space names. But Jumia and Transmedics, ton of strength today. They're clear outliers. And you're seeing a lot. Like I wish I was doing the streams back in Q3 of last year when Transmedics was in 30s because I was the only one talking about it. Me and I think Jonah was the other one. On like nobody was really talking about, and also Logical, 3 people. Nobody was really talking about, but now so many people own it now because of the clear strength in the charts. But like nobody saw the fundamental story. I think the fundamental story is just beginning still. Like I've been saying, it's a $250 stock by end of 2025. Like still, and I was saying that when it was at under $40, and people were like, "You're predicting a 4-bagger in less than 3 years? That you're just talking air." I still see it coming, and I said this last week, like. The time to make money is right now. AI is going to make it so much more difficult for the poor to get rich. Rags to riches stories will become less and less over the next course of the next decade because AI will replace a lot of headcounts. It's going to replace a lot of opportunities because the bigger players, the rich, the wealthy, and the bigger companies, they're going to leverage AI to make the smaller players obsolete. That's just how capitalism works. AI is going to be a major tool for these rich and powerful to get even more rich, even more powerful, and make the rags or the people who are not as don't have the luxury of having that cash flow or being rich a lot more difficult to get there because of the obstacles that the rich and powerful are going to place now because of AI. So the time right now, next like couple years, is kind of the, I won't say the last hurrah, but it's going to get nearly impossible to go from rags to riches. And that's why I'm just like, I want to do this stream with Austin. Like we both want to do it because this educational purpose of we're emphasizing like right now is the time because it's going to be too late potentially in 5 years. And there's no going to be another opportunity in this once in a lifetime thematic like AI where you can benefit off it with these mid cap to small cap names who will become these multi-baggers, and you can see your wealth compound. So you become a good enough position by the time where the discrepancy between rags and riches is so great, it doesn't matter to you because you're already at that point. You don't have to get there. So that's why like take this in, do your own research, risk the biscuit right now because there won't be that many chances where you can capitalize on a thematic as big as AI in your lifetime. I really like space economy, maybe, but again, like that's just so far ahead. And I don't think it's going to be as revolutionary as what AI is going to be causing for everyone's life.
You can't beat it, man. You just can't. It's unbelievable. It's unbelievable the opportunity that sits in front of people. And it's unfortunate how short term the opportunity is. I'm with you. I feel like if I don't, the last couple years have done pretty damn well. Now, nothing is ever enough for me, if we're being honest. I'm just one of those people. I was telling my wife that the other day. I was like, I really love you. And she's like, why? I'm like, because there are times when I'm with her and the kids where it's like, I'm satisfied. I don't feel satisfied often. Where like I just want to keep going, man. I want to see what's behind the other door. I want to see what else is beyond the ridge. I just got to know. Or maybe it's I have a delusional grandeur about me. I don't know. I just think that there's so much opportunity in the world, and I'm not living if I'm not tapping into it somehow. And I think the market offers, like I've said it a million times, I'll say it again, it is one of the only businesses anyone can start with minimal to no capital or experience, and within a few years have an ATM in their front room that just prints out cash for them without having to work 60 hours a week chained to a desk. So if that interests you, I would take advantage of everything that we're trying to tell you. And while you're at it, go follow Stocks Every Shy on Twitter if you're not following him already. And then the link in his bio gives you access to his section where he's breaking down psychotic research on these trades, dude, that tell you more about the company than you even know about yourself. So if you want that like premium alpha, that's completely free. We're never gonna to knock you out of there. We're going to take it a step later, coming very soon, where you can get an even deeper look. But for now, I'd get that while it's free, get it while it's hot. And you can find it in the link in his bio. We also have the 50% off going right now to get a coach and get this shit going. So take advantage of the resources available. At the very least, hit the notifications on the stream and just come here every week. It's free every Monday, 5 o'clock Eastern. Like you would have known about Transmedics. You would have known about Tesla. You would have known about Snowflake. You would have known about Jamia. You would have known about Rocket Lab. You would have even known about NVIDIA. Like we got that one for over 1,900% at this point, but you would have got it again around $80. You would have gotten it a million times is my point. There's no way you don't make money. So let's get into it. Smash or pass. You guys got some tickers. We ran a little long. We're going to go a little over and get this going for you. And while I'm waiting for that, I'm going to go through the SPY. We detailed it a little bit earlier. That chart's crazy. Excuse me. We're just going to go through a quick run through of an options trade that you can take this week. Actionable insights that give you that money making juice that you need, my friends. So we're looking at SPY right here. We're going to pull up SPX because it's a little cleaner on my chart. This is the hourly view. You can see we have a nice basic consolidation at 545. So just apply these over to the SPY. It's $545 a share. Here's what I think is going to happen tomorrow. Volume was a little weak. I think that we need to pretty much see price action above 548, and then I would go for 552. So again, we always look 3 weeks out. So if you're going the options chain, we're gonna if we're looking at being bullish on the SPY here, okay? Here's what we're gonna do.
July 19th expos.
What's up?
You're gonna do July 19th expirations.
Pretty much. Go 3 weeks out. July 19, 18 days. I'll take it. We're looking at, I believe we said where do we go? 552. So these are trading at $233 a piece. Delta's actually decent. IV's low. I'll take it. On the breakout, over 549. That is the buy opportunity. I'm going to flip back to the chart here. This is the specific options contract. I could put that in the chat for you. So in the event, we're going to give you the bullish and the bearish trade, because I want you to be prepared. I have successfully led you through 52 weeks of 100% or more on these options. I don't intend to stop. There's no reason you're not making money from this stream. Over 549, use an indicator like stocks, but if you want to auto calculate it, I personally like above 547, but I would go with Stocks Buddy's level of 549. If it breaks out tomorrow, and let's go to the 30-minute chart, because that's how we're gonna do this, right? The 30-minute chart. We're golden above 544. We know this, okay? That's our range. It has to stay above there. If we can break out over 549, which is right about here, right? So is the highs right here. If we can break out, then I think realistically we'll see another sharp move up, but hopefully on volume, and test 552. If we get rejected at 549, here's where the bearish trade comes in. We're going to go back to the options chain and talk about if we get rejected at 549. Then we're going to flip to Pootskis. And we are going to look at, let me take a quick look at this chart. I really think 544 is as low as we go, because below 544, there's an opportunity to go even lower to 542. So I would say I wouldn't take the bearish trade unless we break below 546. So price breaks below 546 on the breakout and confirmation. We would be looking at a low of 544. So really only $2 to $3 to the downside. I'd say 543 I would take. Stronger delta, which means the market's pricing in the downside, or it's a little closer to the money. That's why. But this one will grow in value a lot more quickly. So to go back to the chart and just draw this out for you real quick, in the case that we are bullish, right? We break above 549 here. Once we get a bullish confirmation, which means price comes back down and tests right there, then we go up and we take that options trade. I would personally won't hold it more than 2-3 days, because you don't want that delta to eat you alive. So now the bearish trade, just to draw it out for you here. If we hit 549 and we get rejected, right, and we get confirmation of this rejection, then we are going to take this trade down to 544, where it will probably test support. This would be the entry, which is that confirmation, right? You want to use at least the 30-minute chart. 15 minutes acceptable if you have a higher degree of skill, but I would say stick to that 30-minute chart. Both of these trades will play out if it follows these levels. So I've given you a guaranteed win unless the SPY literally moves between 547 and 546. Highly doubt it. So write those down, put them in a notebook, slap it on a sticky note, put it on your forehead, do what you got to do.
So I actually like the downside one, because
there's huge downside below 544. I mean, you're trading to 535. I'm trading that gap right here.
Oh, no, I was
saying
saying
this.
Yeah, definitely. But I'm just saying for this week, we're due for a rug pull day, like a 2% blood day. Friday is a perfect setup. If the NFP is not the number that we want to see, there's gonna be no one on this. It's gonna be a low volume, red, bleeding type of day where it won't be trend breaking. It won't be anything wonky of like, oh, we're gonna have a correction, but you can make a lot of money on the downside on an option based on just like a light volume bloody day. Like we've had those occasionally past a year or so. Friday is a setup where I could see that happening of just a rug pull. And that's why I'm not taking Friday off. I'm going to be definitely here on the market. There's going to be some moves you can capitalize on if there is some kind of bloody print.
I couldn't agree more. There might be a lotto in play for us there then. All right, let's get into it real quick. Cools, you keep talking about that ass, man. So he brought this up to me a while ago, and I think it ripped like right after I was like, you know what, nah, I don't like it. And then like look, it was like right here, it was at like 47. I was like, nah, I just don't really like it, and it just boomed. I don't know, still don't know what they do. To be very honest with you, I don't know if you have FinViz up or something to get an idea of what the hell they do. From a charts perspective, let's go to a bigger time frame here. Stocks Buddy's actually loving it, bullish here. Pivot point at 75. You got that SMA flowing right below here. It did have decent volume, but to be honest, it just looks oversold. And I don't know if there are any catalysts, but it just does not look appealing.
It's an industrial name, so it's definitely out of my element for sure. I mean, the chart looks bullish.
Get Stocks Buddy, dude. Stocks Buddy was a bull on this at 34 and almost tripled your money. So just there you go. Sometimes I think it could replace me, and I don't like that. If you don't have that indicator, you're absolutely missing out. So here it is. If you don't have it, you got to get it. I put it in the comments. But yeah, I personally am going to say pass on this because I just don't know anything about industrials. But the chart is decent. So above 71, smash it, dude. Keep it rolling. You got to be very green on that position. So I'm going to let you have that one, my guy. All right, GEV. We got Zachary. What the hell is this, dude? GE Verona.
It's an energy play.
Ooh, recent IPO too. I don't know how I feel about this. You do have some trend support that was violated. And I wouldn't touch something that's an IPO less than a year legs.
Yeah.
I would just stay out. Plus, this chart just looks like it's about to crater, come back down to 140s and sit there a while.
Also, lockout periods end 6 to 9 months after IPO. And I think you're hitting that period right now. If it IPO'd in March, or you're getting close to it.
Oh yeah, so all the early IPO shareholders that are up 60% are going to slaughter. Even the early money's up probably 10x. They're going to slaughter you. So that's it, and that's all. Moving on, Baba. This one has really just crushed my spirit. I don't get what's taking so long. China's just killing me, dude. Chinese market names are just destroying me. I feel like you got some snide to say right now. You're not a Baba guy, not a fan.
Yeah, it's a vehicle to capture a China alpha trade. Just don't invest in China stocks long term.
Right.
That's all it is. But I mean, this name has just been. It's like PayPal. It just head fakes you. You think it's gonna break out finally, and then it just betrays you. And usually, in my experience, when stocks behave that way, it's a toxic relationship that I keep volunteering going back to. And I should just like remember my past. Like, there's so many other names out there. Move on. Just like everyone has that toxic ex-girlfriend or boyfriend. Like, move on.
I agree. I will say though, I gotta smash this because now it's giving me this other range here where I'm gonna buy more. I was buying down to 65, 66, and again, if it violates here, our lowest we go is 62. I'm willing to take that 12 to 15% max risk for the 100% something upside. Because if we go below 62, I'm done and it's out and it's over. Because you have no idea how low this is going to go. But I really like this consolidation right here. I think finding this little range, testing up, popping its head, playing a little game with me feels cute, and I'm liking it. So I'm a buyer at 71. You can even range trade this 71 to 80 over and over and over again and make a ton of money. But I'm not touching options on this, just FYI, until we break 81 with significant confirmation. So we've got another one from Zachary. See it. Complete Solaria. What's with you and these weird energy names, dude? What the hell is this now? Complete Solaria. That's got to be solar. Looks terrible.
Oh, so if you guys want to know what's happening with solar, you probably guys are wondering, like, Trump is not Trump winning or gaining momentum and becoming the next president. That's not a good thing for renewable energy. Renewable energy has always been a Democratic play.
It's also a scam, is it not?
True,
like
it could be
have long-term efficacy. I thought they're finding that now.
They are finding that now. So it's early innings. So like that's but they're saying some high quality names like I don't know, like a First Solar, for example, or even Enphase Energy is pulling back 25 to 30% based off Trump's momentum. Like there's
Yeah.
opportunities there. So
Yeah. So Palo Alto, this one is very interesting. So this one, I was a buyer when we got the support test 270. I bought and I'm still holding. So I'm in for now, and we shall see. But that was an easy continuation play from long-term trend. If you look at where it pivoted right there, this one was like a no-brainer in my opinion.
I mean,
Look at
Palo Alto is definitely a blue chip company. That's one of a tier 2 play on cybersecurity that will only get more and more popular. My issue with them long term has always been they've acquired rather than grown organically. And I think the time of that is going to bite them in the ass soon because those kind of companies, that's not going to be AI is going to make that really difficult to do because a lot of products would be easily replicated. So acquiring these like massive assets won't be as attractive anymore. So if you can't like figure out how to do it in house, what is your long term mode? I'm saying Palo Alto is a great stock right now. I'm thinking 5 to 7 years out. So maybe I'm overthinking it, but Palo Alto's dirt cheap when it hit 260, 340. They're growing low teens. They're printing cash. If they have any sign of weakness again, that's 3 straight quarters. That's when you just like, okay, this could be thesis breaking because that's 3 straight quarters of clear weakness and they can't show any kind of innovation in house. They're going to have to just dump cash to acquire assets next couple of years. And that's not good for shareholders. But right now, the chart looks like it wants to hit 400.
So NVIDIA and Palantir this week. NVIDIA actually just picked up so beautifully, dude. It's like a graceful figure skater. It's like right when you think it's over, it's like, you know what? Triple sow cow. Boom. Sticks it. Michelle Kwan in the finals. Look at that. Right off the trend line. So not even off the trend line, off top of range trend, which means this used to be resistance, right? It's turned over to support. And buyers said, I don't even want it near that support right now, and pushed it back up another $10. So, six to $8. Nevertheless, unbelievable.
No, I got into Granite shares and NVDL. I got into.
Yeah.
This is acting so. It's not participating in this rally we're seeing in tech or growth tech, but like it's not giving up nearly any gains. It's respecting 21 EMA. You're going to see the party's going to continue this upcoming earnings cycle, and you're going to think, wow, it's at 160. I should have added in 120s. That's what's going to happen by the end of the summer. Their pricing power and lead that's going to last until throughout 2025. They've called that out. They're 2 years ahead of all their competitors on an innovation front. So I just don't see a world where it's going to pop. And if it does, we'll find out first through the CapEx spend from Microsoft, Meta, and Amazon. Like we'll see it first before the NVIDIA reports. So you can meet Austin and I will tell you, okay, pump the brakes. Like we're seeing a CapEx reduction on these big tech players. There could be some demand softening right now on the hardware space, but we're not seeing that yet. So I'm taking advantage of this dip to the 21 EMA. Generally, the past year, that's been the buying opportunity for a name like NVIDIA. So I want to participate in that in the twice leverage ETF like NVDL, which is a Granite one, and capture the most alpha in that.
Yeah, I mean, I can't speak to that even more of why you should be hanging around. It's all about who you hang around. So we're buying this at the split adjusted price, basically way beyond this. So this was an options contract that I exercised at an average cost of $58 a share. We're buying this technically at 20, I guess with the split, we were buying this at $30 a share, like equity wise. And that's why I'm up, I don't know, like 1900% or something in my long-term TD account or have my retirement shit. You guys, one really intelligent trade can make or break you. In both, like it can make, I don't know. I didn't used to think that way until this trade kind of changed my opinion, where I was just always allocating 5 to 10 grand into these trades, right? And they would go up and take my 20%, 30% until I had one hit for hundreds of, I mean, the options contract that I converted here, I had 5 of them. It ran 2,400%. It made me 100 grand. Just those options, right? Closed those out, bought a car, did whatever, blah, blah, blah. My point is this: one options trade turned 7 grand into 100 grand, right? And then I also then pulled money from my other account to exercise that contract here, just because this is where the options contract was, so that I could get the shares. And then they did the split, which obviously gave me significantly more shares. Now I can just sell options premium against 1,000 shares. I can sell 10 contracts at a time. I can effectively sell $1,000 worth of options premium a week against this position for the rest of my life, so long as the chart holds up. So like, we're trying to shift your perspective into like looking at things a little bit differently, because I think that a lot of people get caught up in like, I only have $500. It's like, now you only have $500 now. If you get an inheritance of 10 grand, that could be life changing. So why not have the knowledge, tools, and education right now? God, it's like, dude, come on. Just get this. So there's NVIDIA. Palantir was on the back end of that. This is another one we were buying at $6-7, and it's now up 300%. Don't really know what to tell you. The golden mean reversion would put this at $30. Like, that's the ultimate test. We are going to hit that. Now, whether we go beyond that, it's up to the market. But at the very least, we got an entry between $7 and $8, and then another one at 12. You're up 300-400%. Easy win.
Mm-hmm.
I mean, we've talked about this one 1,000 times.
Yeah, I mean, Palantir is one of the few mid cap that can turn into $1 trillion company in like the next 10 years. Like, it's a rare thing to say, but like, that's one of the few. If
there's another one.
I don't know if Snowflake can be $1 trillion company due to competition. Palantir has zero competition what they do, and that's why like they knew AI was going to be AI before anyone even like sniffed what LLMs were. They had such a huge advantage. And I think once people understand what they actually do and you see the commercial success, it's going to be too late, but maybe not. Like, again, I said, I could see them being $1 trillion company. They're worth 60 or 70 bill right now. That's a 13 to 15x right there. So I think it's worth a speculative position. Like, just to see if that black box actually is reality. Like, people said the same thing about NVIDIA. Like, that was such a black box on like what the chips can actually turn into in their society. And then we saw what turned out right there.
Yeah. And you can see this one was another one. This was 500 into 5 grand. So if I had the balls, which I should have, to put 5 grand in this, I would add 50, but I didn't, because I suck sometimes. But that's my point, is one trade. And this is 3, 4, 5 trades we're showing you. Would have made a significant difference. But yeah, I think this one's going to 30. I think it's on its way there. So we got one more. We'll do one last one. It's NEE. I don't know. I feel like I've seen this before. There's another energy. What's with you guys in the energy, man? Because they're all about the energy. What's up with that? So looks like I already charted this one. The breakout 63 went to 80. I would have set my target at 76, so it looks like that hit. And now it looks like it's just kind of cratering a little bit. You're going to get that little cup and handle. Now it either picks up and holds 69 long-term range, or it's gone. I don't really have much visibility into energy to comment. Do you?
No, not my line.
Thank you, Sandeep. Appreciate you, my friend. Oh, summertime. That's why everyone's into energy shit. I think there's way better stuff out there than putting a bunch of money in energy right now. Just saying. So, all right. Well, there it is. Gave it to you. You're juiced up. You know the names. You know what to do. You smashed it. You passed it. You got your SPY options trades. Hopefully got your insight into the market. And ta-ta for now, I guess. Stay blessed. Stay out there. Stay up, baby. Do not forget to check out both 50% off and Shai's free product that's available for free, 100% free. Go claim it. It's in his bio. Get access, get these picks, get the research, and start prepping yourself to become better than you once were. That's the deal. 101% a day, baby. All right. Bye-bye now.